Welcome to Industry Focus, the podcast that dives into a different sector of the stock market each day. It's Tuesday, January 8th. I'm your host, Jason Moser, and joining me today in the studio via Skype, Mr. Asit Sharma. Asit, how's it going?
Great, Jason. How are you doing? Happy New Year to you.
Thank you very much. Happy New Year to you, too. Doing very well. I think we're off to a fantastic start, it seems like, here in the markets. Hopefully, we continue to see a little bit of recovery from what was such a tough finish to 2018. And I think we have some names on today's show that a lot of our listeners are going to enjoy hearing about. We're going to talk home improvement and looking at Home Depot and Lowe's. We'll tackle a listener email question. But first, we're going to dig down a bit more into the e-commerce king of Latin America, Mercadolibre. And Mercadolibre is a popular recommendation in a lot of our foolish services, and a lot of our analysts here, myself included, like the business, like what we've seen. And I know that you have studied this business for quite some time. So, let's kick off with some of these questions here to get a little bit more of your input into where you see this business going and what you think some of the opportunities and the challenges are. I think when we talk about Mercadolibre, it's often just immediately compared to Amazon, right? And that is obviously, it's the e-commerce leader in the Latin American region of the world. But given its focus on e-commerce, you feel like there's another aspect of this business that is really starting to show real production here, and it's going to become a bigger part of the business as time goes on, right?
Absolutely, Jason. I had the opportunity to cover PayPal, which many of our listeners are familiar with, and invest in once a quarter for our premium services. And I'm seeing stuff that I recognize from PayPal appearing in Mercadolibre's business, in that PayPal, of course, is an offshoot of eBay, which itself was an early investor in Mercadolibre. I believe they sold their stake a couple of years ago. But PayPal developed as a payment tech company, and it has expanded into this market. And in developing the technology to facilitate payments on its marketplace platform in Latin America, Mercadolibre is also coming to realize that it's got a great set of technical tools that can be rolled out for off-marketplace transactions. And that's something that I'm very interested in. Just to read investors some stats from the company's most recent quarter, and this was the third quarter of 2018. This is Mercado Pago, which is the payments arm of Mercadolibre. Their TPV, that's total payments volume, increased 24% year over year to $4.6 billion. So what is total payments volume? That's not the amount of revenue that this arm of Mercadolibre can claim on its books, but it would be nice.
That would be.
But it is the amount of payments volume that was transacted. And of course, as the company platform which is facilitating each transaction, Mercado Pago gets a little slice of every payment that occurs. And this is a really interesting business simply because Latin America is a mobile-based economy, or it's increasingly a mobile-based economy. And what I mean by that is, if you look at the consumer side of how business is transacted, infrastructure is not quite as great as it is in other developing and developed regions. So in Latin America, and I'm familiar with this because I have relatives in India. My parents were from India. Oftentimes you jump over that infrastructure using your mobile phone. So a lot of commerce is conducted on mobile phones. And this is a great opportunity because so much of Mercadolibre's business is moving to mobile payments. And I'll delve into this a little bit more. What are your thoughts, Jason, on this payments opportunity?
Well, I think that you really piqued my interest when I heard the word PayPal. Anybody who listens to our Monday industry-focused financial show, they know that I and Matt Frankel are big fans of PayPal and Square, and also the behemoths in the industry, right? Of MasterCard and Visa. We love this payment space because we are seeing that sort of secular move away from cash and more towards mobile payments. And as you mentioned, Mercadolibre, they get a little slice of every transaction. And so the total payments volume metric that you pointed out, I think, is a really important one, and it's one that we look at when it comes to PayPal and Square quite often, because you can see the billions of dollars that flow through PayPal's network today. It's significantly smaller on Square's side, but also growing a little bit more quickly. And I think that really shows you the opportunity that exists. More and more dollars flowing through those networks means more and more of those little slices of those transactions that these businesses get. And I think when you look at something like the Latin American economy, it is continuing to grow, continuing to prosper, and having a company that's really leading the way, facilitating those transactions, I think is really exciting. Now, with that said, and we're talking about Latin America, there is a bit more uncertainty in that part of the world. When you think about Mercadolibre from a payments perspective, what do you feel like some of the risks that come along for investors there?
Well, one of the biggest risks is competition, because it is a lucrative market and everybody wants to grab the customer if possible. So while Mercadolibre has maybe one of the best head starts in the business, it's going to be challenged in the future by big banks like Banco Santander, which is also has been an investor in Mercadolibre. Yeah. PayPal itself is a competitor. And even we see the big credit card companies, which are basically themselves facilitators of transactions like MasterCard and Visa. They have their own payments arms that eventually will compete with the companies they're partners with now. So that's one risk. And a couple, when we were trading notes, kicking around ideas for the show that you had sent over to me, I totally agree with Jason. So you'd mentioned currency risk. That's always huge in these companies. Mercadolibre reports in US dollars, but it basically operates in local currencies in each of the big Latin American markets that it's in. Now, those include Brazil, which is now where it's headquartered, the company's headquartered, Argentina, where it was originally headquartered, Venezuela, and Venezuela is a really great example. It's a poster boy for the types of currency problems a country can have. Now Mercadolibre has deconsolidated Venezuela from its operations as a subsidiary. So it's got a really two lengths removed from revenue that it gets from that country. And Argentina itself is another example of a country which tends to have really high inflation and goes through massive periods of currency devaluation. And the biggest problem that this presents for a growth company like Mercadolibre is that over time, it's hard to get consistent results quarter after quarter because the currencies are swinging so much against the US dollar. I should mention one other note that you sent over to me also, which is geopolitical risk. Let's go back to Venezuela. Is it going to be a functioning government and country a year from now? We have an exodus of 3 million people from that country into neighboring countries. This happens periodically in Latin America. It has a history of internal revolution and strife to go alongside fabulously developing economies with a long-term growth potential. So these are some primary risks that are there. But again, Mercadolibre has this early mover advantage and has weathered a few storms since it was originated in 1999. It's been through a few cycles in various countries, so maybe better equipped than a newcomer to address some of these risks.
Yeah, and I think I remember a while back doing some research on Mercadolibre and recognizing, number one, that so much of its success really is hinged to Brazil. I mean, I think that really is that's the crux of their revenue stream. But to your point, they do make their money from a few different places. But it always struck me that the emergence of the middle class in Latin America is really a tailwind for a company like Mercadolibre, as more and more people are coming online with mobile technology and enjoying being able to participate in e-commerce. And so I think those are all really great opportunities for Mercadolibre. And I tell you, one of the questions we always kick around on the team here at HQ is with Mercadolibre, Libre, given it's much smaller than Amazon, a lot of question around whether perhaps Amazon might consider acquiring Mercado Libre one day. You know, the old saying there, sometimes it's easier to buy it than to try to build it. And Amazon does have a track record of making some acquisitions to get into other parts of the world. They recently acquired the Middle Eastern e-commerce player Souk, and I think that was back in 2017, and that was not a small acquisition. It was somewhere in the neighborhood of $580 million, I think. So do you think Mercado Libre do you think the likelier path for Mercado Libre is that it gets acquired, or do you think that it's going to continue to grow and maybe do some acquiring on its own?
I think the company is a great acquisition target for Amazon, but anyone but Amazon is going to hesitate because they don't want to acquire this company only to have to compete with Amazon.com. And I think that one of the advantages Mercado Libre has is that it's been really not reluctant to step into these economies, which we've described are hard to operate within. And because of the currency issues and inflation, they're hard to consistently make money in. And so because of this, almost no one but Amazon would want to acquire the company. Why hasn't Amazon acquired it yet? I'm not sure. I know that Amazon has had forays into Mexico. It has its own game plan to increase its sales in Latin America, but this seems like such a logical choice. One of the factors which may be holding Amazon back is, of course, it just made a huge acquisition in Whole Foods, which it actually went to the market and issued some debt. Now, Amazon, if you look at its balance sheet, it has a lot of leverage it can pile onto that balance sheet. So it certainly has the funds to do it. This would be maybe an equivalent size transaction, if I remember correctly, because Mercado Libre has maybe a $17.5 billion market capitalization, not too far from where Whole Foods was when Amazon acquired it. So I think that the ethos at Amazon is that we can probably build this better. Amazon has a more sophisticated logistics operation. And for them, it's just a question of, do we go ahead and invest and transfer our logistics expertise into Latin America? Or do we maybe speed that up, acquire this company, and then enhance it with how our own distribution, warehousing, delivery facilities work? That's an open question. More intriguing, Jason, every year as it goes by and Mercado Libre continues to grow, and perhaps that possibility becomes more remote. What are your thoughts?
Well, I mean, I agree with you. I think that it seems like a very logical fit. And I think Amazon is probably in a position right now, given the investment that they continue to make in India, for one, not to mention the investment that they're trying to make in China to become a bigger part of that economy. We may get to a point where we may get to a point where Mercado Libre has grown too much to where they're a little bit bigger than Amazon feels comfortable acquiring. And so it is a bit of a tricky situation. They may have been forced at some point to just really decide, okay, which market is more important. And that's where they decided to start making all of their investments. And I suspect that probably is the case, at least to an extent. But I mean, you can't eliminate a dark horse from coming in there. A company like Walmart, who clearly is making acquisitions to gain share there. Even something like Target, you just never know. I mean, these companies have a lot of resources at their disposal as publicly traded companies. So, hey, that'll be one we get to keep an eye on, I think, for a while to come. And I know our listeners will enjoy being able to keep up with it. Let's make a pivot from e-commerce with Amazon and Mercado Libre, and let's talk a little bit about a couple of the big, more physical retail behemoths here in the United States. And we're talking about the home improvement market and Home Depot and Lowe's. We talk a lot about Amazon and how everybody enters, into whatever market they're entering, and they try to figure out, okay, can Amazon compete with us? Can we deal with the Amazon competition? Home Depot and Lowe's seem to be almost Amazon proof at this point. I'm not sure that changes anytime soon either. What do you think there?
I think one of the advantages that both of these companies have had is just the ethos of do-it-yourself. They both make it very easy to do small projects around the home. I know, and this is anecdotal, but personally, if I am 80% towards a project but have a couple of questions, I know I can go to the Home Depot, which is very close to where I live, and ask somebody there. Most of the people who are tired of seeing me on weekends, so if I find one who's not going to avoid me, I'll go grab them by that blue vest and
they
ask
have
a couple of questions.
They have nice DIY videos on the site too.
Yeah, they tell me that when they see me, go home and watch the videos. But I think this is part of what's made both companies successful in spite of Amazon, is because they have an integrated approach, which involves the classes they give, involves installation services, and a very cyclical, massive discount on big ticket items. If you notice, every spring, summer, fall, maybe around Thanksgiving, and at year end, inevitably, you'll walk into your Home Depot or Lowe's when they have all the appliances grouped and have pretty massive discounts, which equal or beat what you might get ordering the stuff piecemeal from Amazon. And I think most consumers still associate Amazon with the little stuff that you buy in a stream through the year, not big ticket items. And that's part of the reason that's helped. And also proximity. Both of these companies have a fairly good, evenly distributed footprint of stores. As I said, if you live in even a smaller metropolitan area, I would call Raleigh maybe a mid-sized metropolitan area. It's not huge. It's not tiny either. There's going to be one or two of these stores within distance of most people in that urban area, within a few miles. And that's helped them also as the physical footprint that was already evolving and pretty set before Amazon came along. So I think in this economy, both of these companies probably retain this Amazon proofness unless we see Amazon just wake up one morning, decide to start building out some very nice, beautiful do-it-yourself warehouses where you don't have to do anything to check out. Just walk out like their Amazon Go stores that they're testing out now. I feel like
they'll probably take a pass on that, given the strength that both Home Depot and Lowe's have displayed through the years. They really do seem to own that market. And I have a hard time believing that Amazon could ever really get in there and fully give them a run for their money. And I think a part of that is, speaking from the perspective of a homeowner, I mean, those stores become invaluable resources. I mean, there's always something that needs to be done at your house. And I mean, even if you're renting, I mean, there's always something you can do when you're renting as well. And the other neat thing about these businesses is really they do well regardless of the weather. We hear a lot of these companies in the winter quarters and going into spring, they'll cite weather as being a problem and slowing down traffic. But typically with Home Depot and Lowe's, I mean, people are going there to get de-icer if it's cold and wintry and icy outside. But if spring hits, they're going to get fertilizer and flowers. And so, I mean, they do seem to be they don't have that same lumpiness that the weather can offer some other in the retail space. But one thing that is interesting to me with these two concepts, and I wouldn't call myself a loyalist to either one. I just kind of go whichever one is closest. But it does seem like Home Depot has got something figured out compared to Lowe's, because when you look at Home Depot, its market cap is more than twice the size of Lowe's. They're bringing in around $30 billion more in revenue per year. But Lowe's is actually the concept with a bigger store footprint, right? They have more stores than Home Depot does.
Yeah, absolutely. And I think the new CEO, this is Marvin Ellison, the new CEO of Lowe's, has put his finger on it. There are certain cues if you walk in as a consumer that you get from a store, how it's laid out, what the end caps look like. That's the end of the aisles, how attractive they are. Is there old merchandise sitting around? And I'm not saying that Lowe's is a sloppy place by any means, but if you're used to observing this stuff, there are subtle cues. Home Depot is just crisper in its retail presentation. It moves its inventory in a little crisper fashion. So CEO Marvin Ellison was appointed this summer, and he's trying to fix operational deficiencies. He himself spent 12 years at Home Depot and was formerly the CEO of JCPenney. So this is a guy with a lot of retail experience. He's looking at their supply chain. He's looking at poor utilization of labor, a lack of standardized truck loading processes. So when the trucks come up to a Lowe's, who goes out and unloads that truck? Is it an all hands on deck? Is it someone who's been scheduled. So these things, which if you think about them, may not seem big by themselves, as you add each operational deficiency up, it makes for a lot of lost sales, lost time. One of the things that Ellison has pointed out is that if our labor is so involved with trying to move our inventory in an inefficient manner, that's less time they've got to spend with customers. I know, Jason, you're a big Starbucks follower and analyze that stock as well. That's something that even Starbucks said in their last quarter, that we want more of our baristas to have customer-facing time.
Yep.
So I think he's got his finger on the pulse of what's really the difference between these two companies. And over time, even though Lowe's has that bigger footprint, I think that's each year helped Home Depot get this edge year after year. The other place it manifests itself is in the income statement. Home Depot's margins, operating margin. So this is take revenue, take your cost of goods sold, and most of your just overhead expenses. That's what's left as operating income. When you divide that by sales, Home Depot's operating margin is about twice that of Lowe's at 15%. So these are problems that are solvable and fixable. But Lowe's is sort of a turnaround story right now, whereas Home Depot is a story of optimizing what's already working.
Yeah, and I'm really glad you brought up that operating margin metric, because that is such an important one to pay attention to, particularly in the retail space. It gives you such a clear picture as to how efficient an operation leadership is running. I mean, and that is something always worth paying attention to. And another thing that struck me, I think a quarter or two ago, I was reading through a Home Depot call. And, the headlines, I think, are always talking about macroeconomic challenges or a tightening housing market or interest rates are going up and yada, yada, yada. And that's all fine and dandy. But let's look at the business and let's look at really the trend that this business is involved with. And Home Depot and Lowe's are both benefiting from this. But management made a note on the call that there is data that says that by 2020, 54% of U.S. homes will be greater than 40 years old. And that's versus 51% of those homes in 2016. And that's all to say that we have an aging house base here in the United States. Our houses are getting older. And what happens when houses get older? Hey, you know what? They require a little bit of fixing up. And that's what Home Depot and Lowe's do so well, is they sell us that stuff to fix those houses up. So I do like that long-term trend there. It does seem like they have a big market opportunity ahead of them. And I think that, to my mind, investors should have their eyes on both of these companies. But I'm going to put you on the spot here, Asad. And if you had to pick one of these names for the next 5 years from today, what do you think is the better investment? Is it Lowe's or is it Home Depot?
Today, I'm going to be a contrarian against myself. I love the underdog, and I love a turnaround story. I love the opportunity to improve margins. So normally I would say, hey, no question, buy Lowe's. You got 5 years. You have a relatively young, very experienced CEO who's going to turn this around. They're going to bring their margins up to where Home Depot's are. Both companies trade at the same multiple against earnings. I believe, don't have it right on me. I might correct this later, folks, but around 18 times forward earnings. They're valued the same by the market. So typically I would say, well, who has the better chance to improve earnings? It's Lowe's. And by that criterion, in 5 years, it ought to grow more in terms of market capitalization and price. But, and this is a big but, I gotta like Home Depot's path. It's optimizing now. One of the things that I was looking at and reviewing for this show is the company's supply chain, which they've engineered now to be the fastest, what they call the fastest delivery network in home improvement. They can reach approximately 95% of the U.S. population within 2 days or less with their parcel shipping. And you have a company which is already best in class. It has an opportunity in this market, as Jason pointed out, to pull market share as more and more homeowners improve rather than switch housing. And we saw this in the last recession. People couldn't trade up when the Great Recession hit. So counterintuitively, both Lowe's and Home Depot started to prosper because folks with the money they did have, they went to their local stores and did home renovation projects. And Home Depot, in any environment, can really take advantage of this. I do think Lowe's will catch up at some point in time, but in a 5-year time frame, all things considered, risk adjusted, I guess I'm going to go with Home Depot.
I can't blame you. I think you got to go with the strong one in the field. I mean, I like you, I felt like Lowe's might be the better opportunity, given that it has the opportunity to make more improvements and really turn things around. But it is really hard to bet against Home Depot. It's just such a strong operation, and they have demonstrated such a long track record of success. I agree. I can't go against it. I think for a while there, I was thinking Lowe's might be able to offer the better investment, and perhaps it will. But I feel like Home Depot is probably a bit more of a certainty. But hey, you know what? Listeners will get to hear us keep tabs on these companies here over the coming years, and so we'll follow these stories along and keep everyone updated. Before we take off today, Asit, we were both talking about an email that we received over the break here at Industry Focus, and I thought it'd be an opportunity for us just to offer a couple of quick opinions because I suspect we have a little bit of experience in this field. The email reads, "Hi, Jason. I'm just curious, what would you recommend or consider as an emergency fund? I have a set amount aside, but should this range as you grow through your career? For example, should your emergency fund be 10% of your net worth at any given time? Thanks in advance for your help, Aravind." And Aravind, thank you for the email. We're sorry for getting to this so late. As I said, we got that email over the break, but we really thought it would make a good topic for the show, so we wanted to give it its due attention. And I'll start with you, Asit. Where do you fall on the emergency fund discussion?
Well, let's start with basics and work our way up to a final answer. Basics to build an emergency fund, that presupposes that you've got some spare dollars you can set aside. And I know we all, all of our listeners are at different paths in their financial careers, and you may be at a really great point, or you may be struggling. But the point is to try to find some way to put something aside each and every week. If you read a lot of personal finance articles on the web, you'll see a number. I see this number a lot, and Jason, I'm sure you do too. It's $400 to $500 or $600 as an emergency fund, and this comes from studies. You'll see a headline: the average American doesn't have $400 for an emergency. And I believe from the ones that I've skimmed over the years, that number is being generated from your car breaking down. So if you had a car emergency. Yep. That must be the average price, because it takes $400 to $500 to get your car out of the mechanic's hock and get back on the road. So that's sort of the first step when we think about emergency funds. But there's a progression also. If you just increase that number from, let's say, $500 to about $1,500, that might cover your ability to pay your rent or mortgage in a month, or have a brief, small medical illness. So to me, that's another bucket that's very important. So you move up in these tranches. The next, I borrow from the corporate world. What I used to advise people is to try to get 6 to 12 months of your operating expenses in your household somewhere in a savings account. And finally, Arvind, I think you hit it right on the head. That 10% number is a great number. If you look at people who are masters of finance and you study portfolio allocations, a lot of the really wise people who I've read in my career say that, hey, even if you're very invested in stocks and bonds, you should have some money in real estate, and maybe about 10 to 15% of your money in liquid assets. Yeah. It could be cash. It could be maybe currencies, foreign currencies, or maybe a commodity like gold, which you can quickly convert to cash. So over time, maybe that, in my opinion, is a great goal to have, because as you grow more wealthy, maybe an emergency for you might be needing to tap in 10%. I hope I get there someday. I'm a far ways from that. But let me flip it back to you, Jason. That's sort of a broad, 4 or 5 buckets that I see. What are your thoughts?
Well, I like how you hit that in stages, because I think there is an easy answer to just say, have 3 to 6 months, and that's just the standard rule. But to your point, I mean, clearly the data out there shows that people are having a tough time saving. And that is a challenge in and of itself. And I was recently at on a field trip with my older daughter. Her school went to the Junior Achievement Financial Park here, and it was basically a day where they learn what it's like to be an adult. They get their paycheck, they have to calculate their net income, and then budget everything for monthly expenses. And those kids found out really quickly, number one, money doesn't go as far as they'd like it to, and number two, it seems like you need insurance for everything. But the old saw, and we kept on telling them, make sure you pay yourself first, save a little bit of that money. And the younger you start doing this, the easier it gets. And the idea isn't to have that 3 or 6 months immediately. That's the goal to get to. And if you can reach that point, then that's terrific. And then the other way to think about that too is once you get to that goal, you don't necessarily have to keep socking that money away for that particular fund. You could be saving money for something else or investing that money. I mean, everybody's financial situation is unique. I think that if you can have a 3 to 6 month cushion where you can afford your rent or your mortgage and your necessary bills in case of an emergency, hopefully there is health insurance that will help if there's a medical emergency. That 3 to 6 months is a good goal to have. But to your point, the older you get, hopefully you're making a little bit more money, and maybe you need to save a little bit more to cover your expenses then. And that's a nice problem to have, I suppose. That's where you want to get to eventually. But I think that either way you look at it, to me, what really stands out with this question is no matter what, the younger you start this, the better off you're going to be. And it's a good feeling to know you have some liquid cash available to take care of yourself in the case of an emergency, because chances are you're going to run into one or two of them throughout the course of your life.
Sure. I'll just add one last thing. Even if you're not young anymore, there is a certain reward in just starting that disciplined savings week in, week out. However small it is, it's rejuvenating, and it's very similar to something I know a lot of fools recommend, which is invest regularly. Don't just get a lump sum together and knock it all in the market. Try to invest with every paycheck. And I think, Jason, what you said really resonates with me, that the concept of paying yourself first, it is an old saw, but it's such a powerful concept. Pay yourself first, invest some, set some aside. There's a rhythm to it. And no matter where you are in your financial progression, you can always put some aside each month, each week, each time you get paid. And it just has this wonderful compounding effect, which is lovely after time.
Indeed. Well, we'll leave it at that. Austin, it was great talking with you this week. Thanks for the time.
Absolutely. Thank you, Jason. This was fun.
Okay, and as always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. This show is produced by Austin Morgan. For Asit Sharma, I'm Jason Moser. Thanks for listening, and we'll see you next week.